Hi there, you have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and this is the show where we highlight all the buzzers in trade right now. We will connect with our researcher as well as our technical expert for today in a short while from now. But before that, let's also put the spotlight on the markets because it's been a good day coming in for the markets and definitely a good start of the new year 2025, where Nifty Bank is holding on to strong gains of more than 200 points right now, while on the Nifty 50, it's almost a century points that we are seeing on this particular counter. A couple of these large cap counters are doing pretty well for themselves. Stocks like L&T, M&M are leading from the front. Other than that, Big Bird Reliance is also lending support. But on the flip side, a couple of these metal counters, the auto pack select counters, definitely on the back of the disappointing sales data. Stocks like Escorts and Bajaj Auto are seen to be under pressure. But for today, all these chemicals and fertilizer counters are indeed on focus. And let's also mark the flash on the bottom of your screen, wherein Union Cabinet has approved higher subsidy. That has been the news that has been going on for a while now. And now the cabinet approval is through for the hike in the prices of the fertilizers. That as per our sources, and all these stocks like FACT, NFL, RCF are holding on to gains and in the green right now. But with this, viewers, let's move on and let's start highlighting all the buzzers in trade today. But before that, let me welcome Jinay, who is joining us on the research side as well as on the technical front. Rupak is here with us. A very good afternoon, gentlemen, and thank you so much for your time. First up, Happy New Year wishes to both of you. But let me just take stock of the auto counters then, because all the stocks are in focus today on the back of the December auto sales data. And we are seeing kind of a mixed bag coming in for this particular, for the month gone by actually, because select counters in the specific segments have outperformed our expectation. Case in being for M&M, wherein passenger vehicle sales have been really good for the company after the company was also not giving significant discounts. Even after that, the sales have been holding well. In the automotive division, the sales data has been close to 70,000 of units, and even in the tractor division for M&M, we have seen a 20% jump coming in on a YY basis. When it comes to Bajaj Auto, definitely a bit of a disappointment coming in. That's clearly visible with the stock reaction as of now, because we were expecting sales number close to 3.5 lakhs of unit. 3.2 lakhs is what the company has reported. Other than that, a short while back, we have the numbers from Eicher Motors VECV as well, where the company has showed a sales of 8,324 units. That's definitely above what we were expecting at ET Now, and definitely what we can see is that Eicher Motors, after the sales data being reported, the stock is seen to having a good up move. So that's about the auto counters. We are waiting for more numbers within the different segments. But with this, let's move on and let's get to Rupak then. Hi Rupak, good afternoon. Help us with your first stock, that is ABB India. Tell us, how do you see the stock on the technical front?
Right. So ABB is finding support near its previous swing low on the daily chart, and if you look at the longer term chart, the stock is not a mid-term buy. It's a mid-term sale, but for the short term, one can initiate a long position because the stock is finding support near its previous swing low, and there is a positive crossover in the RSI. Then this is the first time the stock has made a higher low. So on the higher end, the stock might move towards the higher level, but there's a limiting factor which is standing at around 75.50. So the stock can give a movement towards 75.50, and the support is there at 6,600. So one can initiate a long position keeping a stop loss below 6,600 and for a target of 75.50.
So that's the take coming in on ABB India. Moving on, and Jinay, let's talk about your first counter, that is Irida. Tell us, why is the stock in focus today?
Well, yes, Irida, that's the stock in focus. If you look at the stock price, currently it's almost trading at its 2-month high, up about 4.5%. Well, the company reported its business update for Q3, that is December quarter. If you look at the total loans sanctioned in this quarter, it stood at 31,000 crores versus 13,558 crores. So that's an uptake of about 129% coming in. Also, the loan disbursement that has seen good uptake of about 41% year-on-year basis, stood at 17,230 1236 crores versus 12,220 crores year-on-year basis. With this, the total loan book outstanding currently stands at 69,000 crores versus 50,580 crores. So that's an uptick of 36% coming. So uptick on all of the metrics, and that's why we are seeing the company currently trading up about 4.5%.
All right, so that's about IRDA. But moving on, let's talk about Apollo Hospitals and Rupak. One such basket that has been lending support to the markets and doing pretty well for itself is the healthcare and the pharma space. Within that, you have picked up Apollo Hospitals. Tell us why is this stock making up to your list?
You stated correctly, the healthcare and the pharmaceutical stocks are doing great lately. And this particular stock has given a consolidation breakout. So previously the stock was consolidating within the range of 5,100 and 5,400. And in today's trading session, the stock has given a breakout above the high of the recent consolidation. But the stock needs to sustain above 7,400, or if the stock gives a closing above 7,400, it would be great for the stock to witness a rally which might take the stock towards 8,000 in the near to short term. On the lower end, 7,100 is going to act as a very crucial support. So one can definitely go long in the stock, keeping a stop loss below 7,100 and for a target of 8,000 in the short term.
That's about Apollo Hospitals. We're moving on. Let's also talk about some of these IT counters that are making an up to Macquarie's list, because of late all these IT counters are in focus on the back of a lot of whole host of discussions and commentary going on with respect to H-1B visa, as President-elect Donald Trump will be taking charge soon. And on that, Macquarie has come out with its take on that, where they believe that the flat wage floor is actually impractical. Indian IT has a small proportion of the sponsors. They have very long tails of more than 61,000 plus filers, and that accounted for close to 80% of H-1B visas that were issued in the US in FY24. Now, most of that, any single firm accounted for just like 3% of the overall visas being issued. So Macquarie sees the current correction as a good opportunity to buy Indian IT services. They have also come out with a list of counters. Their top pick remains TCS, where they maintain their outperform rating with a target price of 57.10 rupees. HCL Tech also maintaining an outperform there with a target price of 20.20, and Persistent System maintaining an outperform with a target price of 6,759 rupees. On the back of this report, definitely IT counters are in focus, and especially these three names. But there are better opportunities than IT in this market. Then moving on, getting back to our expert there, and Rupak talked to us about Bharat Electronics. Off late, this stock has also turned quite volatile. But tell us, what are the levels that you are tracking, and which side you have your eye on? Is the stock ready for an up move?
Yeah, so the stock has been consolidating within the bigger range since for the last 6 months actually. So currently what we can see that the stock is making higher lows on the daily chart, and whereas there is a hidden positive divergence on the daily RSI. So the stock indicates that there might be some possibility that the stock might move towards 340 once again. So if we look at the short-term target, there is a target which the stock might achieve in the short term, that is 320. So one can initiate a long position keeping a stop loss below 282 for a target of 320.
All right, that's about Bharat Electronics. But Jinay, talk to us about VA-Tech Vabag. Why is this stock in focus today?
As VA-Tech Vabag is in focus, the company has secured an order. The order size is worth about 145 crores, and this order is coming in from Chennai Petroleum Corporation Limited. If you look at the project, then this project involves design, engineering, supply, fabrication, installation and commissioning of a desalination water pipelines between CPCL, that is Chennai Petroleum's Manali refinery, and CPCL's desalination plant situated in Kattapalli. Also, this project is now scheduled for completion within 12 months. So an execution timeline of 12 months, and that is where the company is currently focusing on. And if you look at the stock price, currently trading about more than 0.5%.
All right, that's about Createch Vabar. But taking a look at the markets, because it's Nifty Bank that is perking up, more than 250 points of gain is what we are seeing on that particular index. So just building on to the morning gains. But with this fears, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Market Fatafat show, where we are highlighting all the buzzers in trade right now. And Rupa, coming back to you, you have picked up Britannia, and that's one of those beaten down names within the FMCG basket. But is the stock ready for an up move now?
Yeah, if we look at the daily chart, when Nifty failed by about 11% in the last three months, Britannia has fallen by about 30%. It does make the stock attractive for a buy at this level, and I think till the time the stock is sustaining above 46.50, the stock has a very good chance to move up towards the higher level. However, there is a limiting factor, which is that the stock is trading below the long-term moving average of 200 TMA. So for the mid-term, the stock is on a downtrend, but for the short term, one can buy for a target of around 53.70 kind of level. So it's a buy with a stop loss of 46.50 and target would be 53.70.
Right, that's about Britannia, ready for an up move from these levels. But let's also put the spotlight on Tata Chemicals then, because just yesterday the stock was in focus, and on that HSBC has come out with a note wherein firstly talking about their target price that remains the same at 820 rupees. They continue to maintain a reduced rating on this one. What HSBC believes is that imposition of the minimum import price will benefit the company, but that will be in a limited way on an industry level as well. Now the industry demand outlook remains muted amid the oversupply risk, and the MRP protects the domestic players from the further global soda ash price declines and can have a positive rub-off in the volume. So just yesterday we have seen an announcement coming in on this particular front by the Directorate General. But moving on to HSBC's stake, they believe that they are yet to ascertain whether the MIP is a temporary measure, and if the MIP is extended for a longer period of time, a broad sensitivity analysis suggests that a 5% higher volume growth is likely in FY26. On the back of this report, the stock is in full. Moving on then, and let's put the spotlight on big boy Reliance. And Rupak, definitely today Reliance has been lending support to the markets, but the stock can build on to more gains from these levels.
Lately, a lot of stocks are making a positive divergence. So what is positive divergence? When price falls to a new low and RSI does not support the new fall, it tends to mean that the stock is likely to recover in the short term. So we think that the stock might recover in the short term, and for Reliance there is a there is a resistance at around 1320. So initially Reliance is likely to move towards 1320, and we keep our short-term target at 1320. So one can initiate a buy position in Reliance, keeping a stop loss below 1170, and for a first target of 1320. Above 1320, the stock can move up crazily towards 1480.
All right, that's the take coming in on Reliance. We're moving on. Jinay, talk to us about Ultratech Cement. Why is this stock in focus today?
Well, yes, Ultratech Cement is in focus on the back of note by Citi. They have maintained their buy rating and the target price is 12,500. Now, what they say is that the company provides a foot in door to acquire the remaining stake in Star Cement. If the acquisition happens, they believe that the large pie in the Northeast market will be there for Ultratech Cement. Also, they believe that the company does not have any capacity in Northeast cement currently as of now, and if you look at the total market of Northeast, that's about 14 to 16 million tons per annum market. They're estimating an about 10% volume CAGR growth for the company from FY24 to FY27. Also, if you look at EBITDA per ton and the company's trading at valuations, EBITDA per ton valuation currently stands at $200 versus the historical peak of $250. So that's a discount of about $50 for the company, and that is why Ultratech Cement is in focus.
All right, that's the take coming in on Ultratech Cement by Citi. But Rupak, talk to us about Coal India. Just today we have the production numbers also coming in, and this is also one of the beaten down names within the PSU basket. But how do you see the stock on the technical front?
fallen towards the retracement level of the previous rise from 235 to 550 kind of level. So also we can see a positive divergence in the RSI. So it indicates that the stock might move towards 410 kind of level in the short term, and one can initiate a long position keeping a stop loss below 370, below which the stock might become a weak peak.
Take coming in on Coal India, all eyes on that. But let's also put the spotlight on Aster DM, because this stock is holding on to gains of more than 1% now, where the company has actually informed that they will be converting, and they have actually entered into a loan settlement agreement to convert the pre-existing intercompany loans given to one of the companies named Alpha One Medical Private Limited, and their loan has actually now been converted into redeemable preference shares, and the indicative timeline to get this particular deal done is 28 February 2025. No fresh capital is being allotted after this particular announcement, is what the company has said, that this transaction does not involve any fresh infusion of the capital funds into this particular company. On the back of this report, this news flow, Aster DM is in focus today. But moving back then to Rupak, and Rupak, talk to us about Vedanta. How do you see the stock headed from here on?
The share price of Vedanta has fallen by about 16% in the recent chart. Right now the stock has found support at 200 days moving average. So immediately the stock might witness a recovery towards the higher level till the time it is not falling below 430. So 430 is going to act as a very good support till the time it is not falling below 430. The stock has a very good chance to move towards the higher level. On the higher end, one can place a target around 476.
430 is a crucial level coming in for Vedanta, so do watch out for that. But Jinay, talk to us about Kalpataru projects and tell us the news flow here.
Yes, Kalpataru projects is in focus. Companies, one of the subsidiary Kalpataru Projects International Limited that secured an order worth about 1,100 crores. Now this order is basically includes for transmission and distribution segments, also overseas railway business in India and overseas, and building and factories segment. If you look at the total year-to-date order book for the company, now that has exceeded 17,300 crores, strengthening their overall order book. MD and CEO of the company, Manish Mahnot, also expressed his satisfaction regarding the strong momentum of the company's order book going forward, and that is why Kalpataru Projects is in focus. If you look at the stock price, currently it's trading above 1%.
Alright, so that's the news flow coming in on Kalpataru Projects. We're taking a look at the markets because it's Nifty Bank that is now over 300 points of gain at this point in time. But key to note is the cool off in the India Wakes, because that index is now in the red territory. But one such sector that has been shining bright is definitely the insurance companies, and we have got an ET Now exclusive on this one, where we learn from our sources that commercial property premiums will see a steep hike beginning today. ET Now's Anurag Shah is joining us with the latest and exclusive details on this one. Anurag?
So, general insurance companies have withdrawn the deep discount they were giving on the commercial property insurance. So, in result, from 1st of January, the circular issued by companies, the internal circular which they have quoted to their client, which shows that the commercial property insurance has increased by 50 to 80%, and this steep increase is mainly due to the withdrawal of discount which insurance companies were giving after the de-tariffing of rates. So, in last year, the commercial property insurance rates were de-tariffied by regulator IRDA, and after that it was a complete free market. So, in competition, insurance companies were giving deep discount up to 80%, 90%, and after that, now the reinsurers has raised objection on that because their claim experience was getting bad, and after the objection of reinsurers, and now insurance companies have withdrawn the deep discounting, and now new rates are aligned with the IIB rates, which has increased the overall premium for commercial property insurance by 50 to 80%. Just a while back, I have spoken to a CFO of a company also. He has told me that for their renewal, the quote given by the insurance company has gone up by 400%. So last year they have paid the premium of 10 crore, but this year the insurance company has given a quote of 40 crore, so increase of 400% for their insurance of their company. Though property insurance consists of fire insurance, engineering insurance, which is taken by the corporate, that is the commercial line of segment for general insurance companies, and which consists of 10% of their overall business. The 3 lakh crore of industry, so around 30,000 crore of business is of property insurance, and after the withdrawal of discounts, new rates will be aligned to IIB rates, and in that return only premium has gone up by 80%.
All right, thank you so much, Anurag, for getting us the latest and those exclusive details. But before we wrap this show, viewers, just take a note of Maruti Suzuki sales number, because the numbers have been really good, and we have been highlighting that even after giving decent discounts in the month gone by, Maruti Suzuki could really surprise. It could be a double-digit growth coming in for Maruti Suzuki, but the company has surpassed our expectation. We were expecting a number close to 1.6 lakhs of unit, 1.8 lakhs of unit in the month itself. Is what the company has reported, and Maruti Suzuki is known for pushing out the inventory in the month of December itself, even after the shutdowns. So that company has done pretty well, and the stock is now moving above that 11,000 mark as well. We are waiting for more numbers, but with this, it's time to wrap this edition. Thank you so much, Rupak, as well as Jinay, for joining us today and highlighting all the buzzers in trade right now. But with this, it's a wrap. Thank you so much for tuning in.